What's going on, guys? Bang, bang. This week for the Bitcoin update, all I want to do is talk about the Federal Reserve. We know that for the last 12 months, they've continued to try to destroy demand and get inflation under control. They're in control, and it's all one big trade. All asset prices are suffering at their hands. Now, they haven't been as successful in getting inflation under control as they probably had hoped. Right now, for the trailing 2 years, the inflation rate in America, according to the official numbers, is about 16%. It was 6.8% last year and still over 7% this year. That compounding growth of the inflation rate is hurting the American family. Now, as the Fed has destroyed that demand and raised interest rates, they've brought all asset prices down. Stocks, bonds, everything that you can think of, real estate, commodities, and crypto. They continue to try to punish investment assets and consumer good pricing to try to get that inflation rate down. This past week, we saw another 0.5% interest rate raise by the Federal Reserve. This signals that maybe they're going to be a little bit less aggressive. But the big question becomes, when will they pivot? Now, that pivot is important to pay attention to, not necessarily because of the pivot itself, but because it will be a return to the loose monetary policy. As we get back to a loose monetary policy, you're going to have more and more money sloshing around the economy. And my guess is that assets across the board, including Bitcoin, will go back up in a positive direction. One other key point to pay attention to is the long-term damage of inflation. All throughout the 2010s, we saw just under 19% inflation across the decade. But in the first 35 months, as Lance Lampert pointed out this past week, we actually saw inflation come in at over 15.5%. That means that we are doing quite a bit of damage on the inflation measurement. On top of that, Charlie Bolillo pointed out that we've had negative wage growth for 20 straight months. That means that people's salaries and wages is not keeping up with the pace of inflation. That's not good either. And so the question becomes, how much damage is being done to the economy? Well, I've been talking about this year, all the way back in April until now, that there's a possibility that the Federal Reserve is going to actually raise their inflation rate target. It's been at 2% for a while. But now even folks like Bill Ackman are talking about the possibility of the Fed increasing that target rate to about 3%. That'd be a 50% increase in their target inflation rate. Now, as they do this, it doesn't really change anything in terms of the economy itself, but it would require all individuals and companies to start to plan with a different number in mind. Rather than counting on 2% inflation, or at least trying to get there, you'd now have to think their rate is only going to be 3%. And that means that you're going to have to raise prices and likely pay your employees more money. Now, I don't know when all of this is going to happen, but I still think that the biggest story in Bitcoin right now is the Federal Reserve. As they continue to tighten financial conditions, we will see Bitcoin go sideways or down. It's going to be really hard to get a risk-on asset like Bitcoin to recover until we return back to a loose monetary policy. That means it's just a waiting game, and if we use history as a guide, in deep bear markets like this, it's usually been a pretty interesting time to just continue to stack sats. Dollar cost averaging into a great asset and holding it for the long term is one of those core financial principles that's shared by people across all strategies and asset classes. Literally, Warren Buffett and Charlie Munger, they talk about it all the time, and Bitcoiners do too. If you just apply simple investing strategies to an asset like Bitcoin, then you're likely to be on the better side of the probability. That's it for this week. Continue to keep your eyes on the Federal Reserve, and I'll keep you updated as more develops. I'll see you all next Saturday.